Hello, everyone. I just wanted to do a quick recap of the end of the week. It's Friday, markets close, and it's been wild, like I said on my last video. And right now we're looking at SPY, S&P 500, and how it's been doing throughout the week. So we're looking at daily, and we're right here. Let me show you guys. Actually, I can just do this. This is where we're at. So it's just been crazy. The ranges where it's been going from top to bottom. As you guys can see, we've been getting lower lows and lower highs. So in a way, we're dropping, but at the same time, throughout the day, there's moments when the market picks up and it ends up strong. Example, today, Friday. For the most part, we were red until the end of the day. Things just picked up. Now it's kind of like it's a crazy moment because we dropped below this EMA, right, or 100 EMA on the daily, but it's been dropping and then recovering, dropping, recovering, dropping, recovering. If we look at the smaller time frames, this is a 4-hour chart. You can see what I'm talking about. We dropped to recover, crossed 200 EMA just to come all the way back down. Then we open our next candle right below the 200 EMA. Let me remove this box so you guys can see. Right? And then it kind of recover a little bit. And then our last candle here looks really similar to a hammer candle. And for the most part, it's bullish. There's no direction, to be honest. Overall, are we moving down? Yes, we are. But are we also recovering? That's also true. This is just to give you guys an idea how crazy the market is right now. Again, I'm just going based off my recommendations and what I do with my own personal stuff. I'm not trading, or if I do trade, it's probably 1 to 2 trades a day. Again, my size positioning is not that big. It's small because for this reason, it's just not looking good. You could be swinging puts at one point and then boom, it picks up to calls, and vice versa. You can be having some calls and then bam, the market just drops. So we don't have a stable direction, and that's the main thing you want to look for when you're trading. The very first thing you want to look for is it's the direction of the market. You don't want to go against the current. So if market's going up, then you want to get calls. If market's going down, then you want to get puts. So for now, this is what it looks like. Now, the other main reason why I wanted to do this video was because a lot of you guys have been asking me, what type of indicators do I use? How's my trading setup? How do you do in other words, your technical analysis? So just to give you guys a quick recap, later on, I'm gonna do individual videos to show you guys specifically why I use certain indicators. But for now, I can give you guys an overview based off what's on my screen and what I'm showing you guys. So it's really simple. Again, I heard this many times and I've applied it myself. The more minimalist look that you can get out of a screen, the better it is for you. So there's less noise coming in and different things that are probably going to distract you from the actual, candle you want to be looking at, or what we like to call price action. We want to see how the movement of the stock moves in real lifetime, right? So there's no way for you to predict 100% the direction of the stock just based off indicators. So I use them as support to my thesis, and sometimes they work, sometimes they don't. But overall, like if I'm gonna give you an example. If I have 3 indicators showing me the same thing, that potentially that stock's gonna go up, then that's more support to my overall plan. Maybe I was thinking of getting calls for that specific stock, and since I have 3 other indicators telling me that, it's time for calls, then it looks like something more promising compared to just one of them or none at all. So the indicators that I use there's 3 of them, as you guys can see them here. I have the TTM switch. Again, this one's really simple. It just calculates momentum within a stock. So it's really similar to the MACD. But the difference is that one of them calculates momentum and the other one calculates overall moving averages, right? A combination of all the moving averages. This right here is telling me, for example, that the momentum shifted from a bullish momentum to a bearish momentum. So if we look at the candle, at the daily candle, did that really happen? Not really. So this is a clear example of how the indicators don't always work. So again, it's just support to the overall thing that you're trying to do. Now let's look at the second one. My second indicator is this one right here. This one, it's kind of like it's an algorithm, right? That it was really popular in the not Tastyworks, in the TradingView library. There's a public library right here. Look, I'll show you guys. Where's that? Indicators. Yeah, so these are the ones I'm using. And then there's a public library. In here, you're gonna find a lot of them. And some of them are created by the people that use the program. And they're really popular. So they go based, I go based off the likes. So for example, the squeeze momentum indicator, which is the one that I'm using, the TTM switch, it's #1 right now. So why do I do this? You know, that would be the next question. Why am I using this one instead of all the other ones? So I have this theory that it's worked out for me, and I'm sure other people have done the same thing. The reason why I use this one is because, again, it has over 68,000 likes. So just to give you an example, if 68,000 people are using the same thing, in one way or another, it does affect the stock if everyone's following the same indicator. So if the same indicator is being shown to 68,000 people, again, these are just the people that liked it. It doesn't mean it's not showing you the number of the people that are using it. So if 68,000 people are using, or at least are liking this indicator, that tells me that in 68,000 screens, they're all seeing the same thing. So if the momentum shifting from bearish to bullish, I mean, that's going to create some type of momentum and add on to the original momentum that, again, institutional investors are using. And this, again, contributes to those the movement that you're trying to look for. So again, if there's a switch, more than likely a bunch of other people are looking at the same switch that you're trying to anticipate and catch before it happens. So a lot of the times you and that group, group of people that are following the same indicator, create that momentum. So this goes hand in hand with like some of the theories that I heard on YouTube. Like for example, the TikTok theory. Like if you put up a stock that has low volume in TikTok and you just happen to go viral with that video and you create that momentum and you say, you know what, guys, let's all jump into calls, and the momentum actually happens because the volume's not so big, then you're kind of manipulating the stock. Yeah, I don't want to say we can manipulate. I don't want to say I'm not trying to make you guys manipulate the stock, but that's like a good example of how the momentum in a way can help you out. So again, that's the TTM switch, right? By Lazy Bear. Props to him. Now the second one that I use is this one. This one's the one. It's a buying and selling indicator. Basically, it's really simple. It tells you when to buy and when to sell. I know that a lot of people are making their own indicators, custom-made indicators, but to me, this one has worked out for me and it does wonders. Again, not every indicator is going to work 100%. So just to give you an idea of how it works, we're going to look at an example right now. So for example, the indicator here is telling me to buy, right? So if the indicator is saying buy, I like to look at the candles and see how that momentum is working. So I see that we're looking at the 200 EMA. This blue line is my 200 EMA. And right when the indicator said buy, we moved from 323 all the way to 334 in 3 days. Because again, in 1 day. That's a pretty large gap up. On top of that, it's kind of like a breakout. But the indicator did its job. It in a way, it was 100%, truthful, and it showed me what I was supposed to look at, right? Same thing when look at this one's right here. It's telling me there's 3 indications that I should sell, right? Or I should get puts, but nothing really happened. If you look over here, there isn't much going on. It's moving sideways. So again, not 100%. Same thing on this one. It kind of did it for one candle because the volume increase, as you guys can see, it dropped a bit, but not enough for me to say, you know what, this indicator is showing me the money, you know? Right here, this is a good example. It signaled the sell signal. And from this point on forward, the market has been dropping. So it would have been perfect to get in the sell signal. And if you got long-term puts from this point forward, you made some type of money, right? So it's really simple. That's the way I use it. It works for all time frames. If we switch to the 1 hour, it also shows it to you. 15 minutes, 5 minutes, we see the same thing. Then to show you guys the last one that I use, it's this one right here at the bottom. This one's actually called the bottom indicator. Why is it called the bottom indicator? Because it tells you when the stock, well, again, not 100%, but it's supposed to tell you when a stock has reached its bottom. So whenever it flashes green, like you see right here, for the last 3 days, the bottom indicator has been telling me, you know, we reached the bottom, it's time for you to switch. So in a way, things kind of bounce back, but again, it's within the range and it keeps on dropping. So we're getting, again, lower lows, lower highs. But this indicator in a way is showing us that it could potentially reverse. Again, we might have reached the bottom. So who knows? Maybe Monday we open up above the 100 EMA, right? So like I said before, there's just support to your thesis and what you're trying to do with that specific stock. Are you trying to get calls or are you trying to get puts, right? So these are just the 3 indicators that I use. I'm sure a lot of you guys use them. I used to use the MACD. That one was really popular maybe a year ago. Not anymore. It's not as reliable as it used to be. Some people like to use the RSI. You know what? Let's talk about that one. Why is it that I don't use the RSI, right? RSI is supposed to measure a stock's momentum in the sense of like, all right, so whenever a stock is overbought, that indicator tells you, you know what, it's time to, you know, to start buying some puts because it might come back down. Same thing when it's oversold, right? It's time to get some calls because, you know, we might have reached the bottom. It's time for it to bounce back. Well, that applies sometimes. For example, if we have a market crash or a mini crash, or we drop 20, 30 points and all the other stocks follow, of course, the indicator, the RSI is going to tell you, hey, you know, things are way at the bottom. It might bounce back. You know, things are oversold. So if that's the case, it's kind of like it might keep on dropping. Many times that has happened where, all right, cool, you know, it's time to switch because the indicator is telling me to that's it. You know, we reached the level where things might switch, just for it to keep on dropping again. Because whenever we have like one of those mini crashes or a huge reversal, the stocks tend to drop for more than 1 day. So we might have a continuation of almost a week, and the indicator is still showing you, you know, hey, RSI is overbought, oversold. So if that's the case, why use that one if it's not going to be reliable in that sense? Now, a lot of it is common sense. Of course, if SPY drops 20 points and then the rest of the stocks follow, it's kind of like common sense, you know, like we might get a bounce back at one point. So you don't need the RSI to be there at all times telling you that. Again, if you're new and you never, you know, used indicators before, that's probably one of the first ones that I will add to my list. But with time, you get to learn some of these things, and you know, it's to me, it's common sense. If something is way down there, it might be, you know, overbought or oversold, you know, depending on where you're looking at. So that's the reason why I tend not to use that one. But I know a lot of you guys use it. And again, it comes down to this. It's your own trading style, what you want to do, what works for you. For me, I found out that that's not really reliable. It's just like the MACD. And who knows, you know, maybe in a month, 2 months, 3 months, I might switch to a different one. But for now, these are the ones that I'm using and they work for me. And just to throw it in there, volume, that's always important. It's this bars right here. What's volume? Well, volume is pretty much what makes things move. Something doesn't have volume, it's not going to move. We make our money because of the volume and the volatility that a lot of the stocks have, right? Apple, Facebook, Microsoft, Netflix, you name it. They have volume, so they tend to move throughout the day. Now, but if we're looking at a stock that has low volume, it's probably gonna move slow. And if it moves slow, you're not really gonna make a lot of money in that specific stock. Can you still make money? Yes, of course you can. You know, maybe you're swinging BAC calls, you know, and BAC is a really slow mover, but you know, if you catch the right momentum, you might make good money. Again, it's really important to have that in your charts. You know, it indicates whenever people are buying or selling the most. So that's when the volatility kicks in, and you want to catch those moments as the stock is moving. And again, it's all about price action. If I could remove everything here, my EMAs, my indicators, you know, I could probably still, you know, do pretty good just looking at support and resistance points, right? Because again, it's all about that momentum that we're having. Price action. Price action is king. Later on, I will do a different video explaining price action. But for now, I just wanted to give you guys a quick little tour about my trading view and how I have it set up. It's a lot. I know you guys see a bunch of lines, a bunch of stuff that you guys probably don't understand. But once you get the hang of everything and you understand why things are there, even if you don't need them, it's good to have them as a reminder. You know, this could potentially happen because of this, right? So that's pretty much it. And I'll see you guys Monday. Enjoy the rest of your weekend. And don't forget to like and subscribe. And if you're interested, join the Zero Dinero Investment Group.